the number one part, if you're making a portfolio, is asset allocation. If you look at any book on investments or any book on portfolio management, on page 1, it will say asset allocation determines 85 to 90% of your returns. So does this mean that, whether you choose to be in Indian equities, Indian debt, US equities, China equities, whatever, that is going to determine most of your return rather than the individual stocks that you choose there. Whereas as investors, most of our mind space, all the time that we talk in parties, it's only about the individual stocks. We do not think of our investments as, where is my entire net worth, where is my entire investment, how is it allocated again along different sectors. If you look at 2019, for instance, let alone 2020, gold was the number one performing asset class. I think it was up 20% or so. Government securities did very well. Both of them did far about 3 times what the Indian market returned in equity terms. But most people at that time had not thought of allocating their money to these other asset classes. Important thing. And linked to that is that when you talk of asset allocation, again, it is not just defensive versus aggressive sectors. It is not value versus growth. You have to look at all global asset classes. So this means equity across markets. It means also other asset classes like commodities. So you have to look at that, because again, people think going global means if I go and buy a NASDAQ ETF, I'm done. I'm globally diversified. So that is, you're still, instead of being in one market, you're in 2 markets, you're still only in equities. So that is not enough diversification. If